All right, what's up, everybody? Welcome back to the channel. Let's go ahead and discuss Bitcoin. So I have the Bitcoin CME futures chart pulled up here. And as you can see on this candle right here, we printed a high of $100,170. I'll go ahead and show you. If you can't see it, it's up here in the corner. You want to go to the high right there. And I scroll over here on that candle, you can see the 170. So you did get on the futures a print above the 100,000, and then on the spot chart, that high is coming in just shy of $100,000 on the Coinbase exchange, 99,860. So very, very close on the Coinbase exchange. Today's Saturday. We're not seeing much movement here. You're in a very, very tight range. Very tight range of $400 or so. So just be very careful there. But let's go ahead and discuss it. I'm going to pull out the larger time frame chart. On the daily, you can see Bitcoin has exploded out of that range, and it has hit a well-sized measured move and probably plus some at this point in time. We did get a nice consolidation here and breakout and continuation, but a lot of people are probably going to be selling at or above $100,000 to potentially fill that lower CME gap. If I pull the CME back up one more time, you can see there is a gap down here. Now, with this being said, guys, gaps do not have to fill. So I wouldn't be getting short at $100,000 aiming for a $78,000 target. Is it possible that price pulls back that deep? Obviously, it's possible. Anything's possible, but it's probably not likely. All right, it's not the likely scenario. The likely scenario is Bitcoin does pull back and then more than likely finds the low and then continues further up with another leg higher, or it could just consolidate and pull back for a longer period of time. We have absolutely hit overbought on the daily time frame on the RSI. You can see here you are printing some bearish divergence on the daily time frame on Bitcoin. On the weekly time frame, you have no divergence going on here, as you're just breaking out of the overbought region, and this week you're just pushing further into that overbought area, which is why I said once we got the breakout back above 50 over in here, this was a perfect time to start looking for buying opportunities, because I specifically said that being a buyer down here on this week in the $58,000 area gives us plenty of room for this RSI to push up into the overbought regions. So would you be a buyer up here? My answer to you is no. Why would I want to do that if I was a buyer down here? Now, that being said, I am not putting on short positions, and I am scalping intraday ranges, just to continue with the profitability that the account is seeing. So I'm going to obviously keep doing that. But as far as my long-term hodl bags, I'm just holding. Right? I'm just holding. The amount of Bitcoin that I currently have on is a comfortable amount to hold, and it's not going to kill me if I lose it. So I'm not really concerned, but it is fantastic. It is a big portion of Bitcoin, and it is a huge amount of money at this point for me. So I'm okay with holding it. But I definitely don't want to lose it, but it won't kill me if I do lose it. So with that being said, that's exactly the same way that you should be approaching Bitcoin. Can you scalp these ranges and make profits? Yes, you can. Absolutely. You can take those profits and then buy more Bitcoin when Bitcoin pulls back a decent amount. MicroStrategy did have a little bit of a pullback on Thursday based on Citron Research putting out a piece saying that they are short. I didn't read the short report, but Michael Saylor basically said that they're making about $500 million a day with the strategies that they are using in order to buy Bitcoin. And they will make money even if price goes lower. Even if price dips to 70 grand, they're going to be just fine. So, yeah, I think I'm going to look into selling way out of the money calls and way out of the money puts on MicroStrategy coming up next week. The sheer amount of implied volatility that those option contracts have on them are just crazy insane. Yeah, you're looking at an IV rank of 98.7. If you look at the 6-day option right here, you can see that the implied volatility is up over 200%. And these strikes, there are a lot of them. I don't know what the prices will be when the market opens. Obviously, I'm going to look into that Monday morning. If prices are this high, up in the 750s, 760s, then heck yeah, I'm going to throw on some. And it has already had a nice run to the upside. I mean, if you go look at the all-time high on MicroStrategy, it was around $200. I mean, the breakout on this is a massive move. I would not call this a blow off top. Like I said, Citron Research has a lot of weight. When they bring out their short reports, a lot of people will take profits if they're holding long positions based on Citron Research's report. And then obviously, if you get any kind of sell side happening on that day, it's just going to make the day traders jump onto it, because it's got a lot of volatility to the downside based on the short report produced by Citron Research. So I think a $700 strike call would be a very easy way to make a little bit of money next week. And so I will be looking into that. And I will be looking for both sides. The lower I can get it, if I can get it down to around the 250s or the 200 on the put side with that size of implied volatility, I think there is premium to be had on that trade. I don't think you're going to go that low or that high in 6 days, which it's 6 days today. It'll be 5 days Monday. Going back over to Bitcoin though, this thing's pushed higher. We've all seen the news. If there is a big surge of retail that comes in, yeah, it could absolutely help with more buying pressure and higher prices. It is what it is, right? You're at all-time highs. Prices are going to go wherever prices are going to go. There is still money that can be made no matter which direction price goes. All right. So let's go ahead. I'm going to go ahead and give you your expected move. Next week, it's only a $65 expected move. You can see last week we traded right up to the expected move on Thursday, and Friday we basically traded around it. Not a lot of range in Friday's candle. Most of that range came from Thursday. This was the breakout to the upside here, and then some consolidation at the highs. Next week, you're going to open around 59, 60, and you got $65 expected to the upside, $65 expected to the downside. So take your positions how you will. You did make fresh all-time highs last week. This week you haven't. Last week was a pullback, and this current week that we just had was just a very small range week. It was an inside range week. As you can see there, you did not take out the previous week's low. You did not take out the previous week's high. This does look good. It looks corrective in nature, and we will see how it plays out. Here are the exact prices for expected move high 6034, expected move low 5904. If I pull up the RSI here, you can see that there is clearly some fresh bearish divergence. We did get some bearish divergence over here, and it did play out from this close to this close. This is a higher close. I know some people say when you just make a higher high, then make a lower high on the indicator, that is divergence. You need a higher close. This close right here is setting at 56.15. This close here is setting at 56.48. This is a higher close and a lower print from this close. All right. So that is bearish divergence, and you got that play out here. That was your divergence playing out on this red week. So a lot of people noticed that divergence, and then they did try to get sell side, and they did probably make a little bit of money on that downside expansion, but that played out. It found support, and then price shot right back up the very next week. So this divergence from this spot to this spot, in my opinion, has played out, which makes this divergence fresh. And it is divergent, so it is clearly a lower high. And if you line this peak up to that weekly close, all you need is a higher weekly close, and you got that here, and that is your lower peak. I don't know if you're even going to play out with any bearish divergence here, so just be very careful. Anytime I see bearish divergence on the weekly, I do start to get a little bit more creative. Might even go out there and buy some way out of the money or sell some way out of the money calls just in case next week. I haven't made my mind up just yet. So, I mean, obviously I'll make my mind up as time progresses, but just be careful out there. Just because I'm saying there is a little bit of bearish divergence on the chart with the RSI, it doesn't mean anything. If we go look at value versus growth, we just barely took out last week's low. All right, we did get a move higher into resistance here, and then it ultimately sold off, and it did close below last week's low. But if you look into comparison where we were last week when I put the video out, we're virtually unchanged on this chart. Virtually unchanged. But if tech starts to become a little bit bullish, I think that rotation out of value back into tech would happen. A lot of your major tech stocks, like your Microsoft, this is one of the biggest companies in the world right now. It's sitting at 417. All-time high is up at 467. There's plenty of money to be made in that range. And Apple, not really as much money to be made in the range as you're setting at around 237 all-time high, and price closed at 229. So little less than 10 bucks there. Nvidia is trading at the upper edge of the expected range, or upper edge of the range. You even made fresh all-time highs this week and then having a pullback. So some of your tech plays, they did get a nice little run and they are pulling back a little bit. So this is why you're seeing that move lower on the ratio, on the growth versus the value ratio. That's why you got this little downside move here, because of, tech just not catching that yet. If I go pull up VTV by itself, which is Vanguard's value ETF, you can see you are at and made fresh all-time highs this week. And let's go discuss McDonald's real fast. This was a trade that we discussed last week during the members only live stream. This was Friday's chart. That was the close on Friday. Sunday, I did the live stream. I specifically said I was going to be looking for a retest of the yearly opening range, and that is where I was going to be looking to take bearish entries on McDonald via using put options. I did that trade, and as you could see, that trade was looking really good on Thursday. Unfortunately, I was not able to take off this trade on Thursday as it didn't get down to my 281.55 target. But at this point, that would have been close enough for me, seeing how I entered the short all the way up at 295. That's better than a $10 gain on the option. That is what I was looking for, right around 10 bucks. I got the 10 bucks. I had a doctor's appointment, and by the time I came back from there, it was already too late. I was looking for resistance to come back in, and if it would have gotten back down here, I would have taken the trade off. Unfortunately, it never did come back, and here we currently are. I repeat, I am not going to let this trade run back against me. I will close it out as it is in profit still, but it's not right where I want it to be. Obviously, I would much rather have it lower. This is right around the midpoint of where I got my entry, so I'm still okay, but I definitely will not be taking profits above 292. I'm going to close that thing out well before it ever gets there. Hopefully it finds a little bit of resistance, but if you're going to say, well, why didn't it continue to go? I'm going to show you why it did not continue to go. You have a weekly support level here at around 288.66. That is your support, and that's one factor. Second factor being this right here. You've got the 21 exponential and the 50 exponential moving averages on the weekly time frame. So generally, your first stab into these areas will get a slight pullback, as bullish people will take entries here based on these moving averages. Tesla did break out again, but then sold back off. This is a high quarter close here. This is the highest quarterly close on Tesla's history. So we go look at the quarterly time frame and we close the RSI down. You can see here, this is your highest quarterly close ever. Well, no, this would be your highest quarterly close ever. This is your highest bullish close. All right, so that's the area we would mark as resistance. But that area is also acting as resistance as well, more or less, but still I mean, this does not look like it's trying to retreat just yet. In fact, with that daily close like that being just above it and above this daily res, I don't see any reason at all why Tesla cannot continue to move higher. This is not a short trade. I would not short Tesla based on this high quarter close here. Absolutely not. I mean, this daily close suggests you're going to see higher prices on Tesla. I would not be shorting this. Now, something like this and then a move lower and then a rejection and a close under this candle, maybe I would look for a short entry. But we don't have that. Right now, this is structured more bullish than bearish. Anytime you close a daily at or just below a resistance level, that is not any way, shape, form, or fashion telling you to short it. Look here how it closed at a resistance level. This is your 2023 high. It is a big level. You got above it briefly, closed below it, just below it. Look what happened the very next day. Boom. That's why you do not look to short it if it's doing this. You want resistance to hold under support, and it didn't. This would have been the supply zone. This would have been a good hold. What we needed to see would be a close under this candle's open. That would then give us any pullback to the upside would have been a shortable event. We didn't get that. We're going in the opposite direction. We're heading higher, closing higher. So you don't want to look for shorts on Tesla just yet. And we have gotten that massive move on the dollar here. So that short trade on Euro USD that I'm holding currently is looking absolutely fantastic. Parities right down there. We essentially got into this short trade at 111 and we're sitting at 103 right now. So no reason to get out of this short. Not any reason at all. So with that, I hope you guys have a fantastic rest of your day, guys. Make sure you guys trade safe, trade smart, and for everybody, happy trading.